Is mutual fund safe? What happens if mutual fund house closes?
See, when a mutual fund house is closing or it is getting acquired by some other company, it is very important factor that the investor should know what is happening in the backend. But I don't say that it's a very hard thing or it's a very risky thing to have, because it is all sorted very safely. But before getting into that, I should probably help you with understanding what actually mutual fund is. I'll give you a very easy idea about what mutual fund is. Mutual fund is a pool of investments which is received or collected from investors like you and me, and this pool of investment is being managed by a professional fund manager, and this fund manager is using it to invest in different securities. Mutual fund itself is not an investment. Mutual fund is a sort of vehicle. Mutual fund is a vehicle for you to invest in different portfolios like stocks, bonds, gold, whatsoever it is. So basically mutual fund is just collecting a lot of money from investors, and a professional fund manager is managing it for you. Basically you, just like you hiring a proper fund manager. So mutual fund is as simple as that. And we have to understand that in India, mutual fund is clearly organized or probably regulated by the body we call SEBI, Security Exchange Board of India, and that is what it makes so beautiful when it comes to mutual fund. Now I'll come to this point. If a mutual fund house want to close, you obviously know if this mutual fund is being regulated by SEBI, there should be some means and measures, right? So the simple thing is, the mutual fund has to approach SEBI for an approval for closure, or SEBI can direct a mutual fund to close a mutual fund. Okay, in both cases this can easily happen, and the investors will be given back their money according to what the net asset value is. That is, according to that investment scale, what is the current value of mutual fund, you will be getting that money back while the mutual fund house is closing, and it is completely regulated by SEBI. So for you as an investor, you don't have to be worrying at all when you think about what happens if the mutual fund house closes, because SEBI completely regulates it, and SEBI has a very clear method on returning the fund to investors on the basis of last available net asset value. So what is this net asset value? I'll just give you a very easy example. Net asset value means it is the net asset value, NAV, is the actual price of a single unit of a scheme. So NAV per unit is actually the total market value of the scheme divided by the number of units given. It's a very easy measure. Basically you would say that let's say Tata Motors is having a share price of 500 rupees. So this 500 rupees is the actual price of a single unit of Tata Motors share, right? The same way mutual fund scheme do have small prices like 20, 10, 50, 30 rupees, and let us say 50 rupees is the NAV. You enter in that 50 rupee NAV mutual fund, and slightly this 50 become 51, 51 become 52, and that's how you make profits out of it. So NAV is as simple as that. Hope you understand that. Now, if a mutual fund is getting acquired by any other company, let's say, for example, just giving you a very random example, let us say Axis Mutual Fund is being acquired by HDFC. Let's see what happens. Usually the acquisitions can be done in basically two methods. That is, if a company acquires another mutual fund, that mutual fund can be proceeded in the same name and same format, just it is overseen by a very different company. No other changes, just that thing. And also the second thing is that the name of mutual fund and all of the things regarding the mutual fund could change, and it would be coming under the new fund house. SEBI approval is required for the both methods, and it is very important. We have to understand that in any cases of mergers or acquisition, you have an option to exit the scheme. At any point, if at all a company is being acquired by any other company, SEBI will be giving you an option to exit the mutual fund without having any levy charges, because if at all there would be some mutual fund which will be having an exit load, that is, once you exit you might have to pay some small percentage of money if it is within the lock-in period of the mutual fund. So in this case, you will not be levied with any other charges. You have the option to exit, obviously depending upon what the NAV of a mutual fund is. So being said that, if the mutual fund house closes, or if the mutual fund house is getting sold to some other company, being an investor, we need not to be worrying about anything of that.
How does actually SEBI protect investors?
See, investors are people who actually put in money to a scheme in expectation of getting a profit out of it. And SEBI being the regulatory of the capital markets here, you have to understand that for SEBI, investors are the top priority, because investors do play a very important role and is the backbone of complete the financial side or the capital market side of a country. So for SEBI, the most important thing would be obviously investors. So SEBI itself, on April 12th, 1992 is when Security Exchange Board of India, SEBI, was established. And you have to understand that the primary goal of SEBI is to manage Indian commodities and securities market. And for that, SEBI have 20 plus different organizations. And here I'll read out few of the ways where SEBI is actually helping out the mutual fund investors. Okay, these are different ways that SEBI is actually protecting the investors from having any sort of bad malpractices or anything of that sort. See what SEBI does according to section 11 of 2 in SEBI Act 1992 outlines options of SEBI to carry out the laws of mandate for investment protection. I'll tell you what it is. It prevents unfair and deceptive trade practices in the security market, regulating significant market share acquisition and corporate takeovers, obviously as we have said, and governing activity of stock exchanges and security market, encouraging education of investors, registering them, governing their operation, including the mutual funds, and fund for investor protection. That is another important thing we have to talk about. SEBI do have a fund for investor protection which has been raised to 1 lakh per individual. If there is any malpractices happening, because of the broker's breach of duty, if any loss is getting happening for an individual, you have a sort of insurance of 1 lakh rupees. That is the fund of investor protection. And you have a program of awareness, investor awareness, and another important part is investor education and protection fund. SEBI do have a fund for the investor education and protection. So all of this shows that SEBI has been taking all measures for an investor to be staying protected, to have that confidence to invest in India, and it is just good. And to be very frank from my side, what I would say that one of the greatest things that the government has done would be the SEBI Security Exchange Board of India has been working fantastic, right? So SEBI has made it so safe for us to enter and exit the market. So you have to understand that this safe environment we have in India, we have to start investing.
Mutual fund investments are subjected to market risk. It is said in the ads, right? So how much risk do we actually have while investing in mutual funds?
See, every investments we do actually have some kind of risk, be it real estate, be it FD, be it even savings account, being the mutual fund, whatever it is, if you do some investment, there is some risk associated with it. I would say that me sitting here, you sitting where you are, or you driving a car or whatsoever also have certain risk. The same way, mutual fund is also having a very minimal but do have a risk. Now I'll tell you, the risk of mutual fund is not same across all type of mutual fund. Mutual funds do have different returns and different risk. You look at equity mutual fund. Equity mutual fund actually give you fantastic returns for a very long period of time. And we know about inflation. Inflation is a risk. Inflation is a risk in the sense, you know what inflation is. Your 100 rupee will be having a lesser purchasing power the next year. That is, let us say the inflation is 5%. Your 100 rupee today will be having a value of 95 rupees the next year, which means that you are really losing the value of money. So obviously inflation is a huge risk. So if at all you're keeping your money without investing, you are getting hit by inflation, which is a risk which we are not concerned about, or which we might not be aware about. So when you're looking at the inflation, equity mutual funds are great methods to beat inflation in a very long term, and also not only just beating inflation, it gives you another returns as well. So few of the risks are worth taking, right? So on mutual fund, specifically when it comes to the equity mutual funds, it is a risk that is worth taking, I would say. Now, it is not always like equity mutual fund, fabulous returns and fabulous risks. No, it is not like that. You have liquid funds. Liquid funds are those funds which focus on capital protection and a very gentle and small amount of returns consistently. So there are liquid funds as well. And also you have to remember that risk is not always based on the risk and return sort of thing. There is something called a liquidity risk. Liquidity means the time taken for you to cash out an asset is what we call a liquidity. So I'll tell you, real estate is a very much illiquid asset. That is, for you to, let's say you have a real estate worth 50 lakh rupees. Let's say you need 1 lakh from it. You cannot partly get, right? And also, if you have a 50 lakh rupees and if at all you want to sell that land, it might take 3 months, 6 months, or probably 1 year. But when it comes to mutual fund, it is not like that. You can have the part pay, like partially exit the mutual fund. You also can get the whole fund overnight. So the liquidity risk is also should be considered. While the liquidity risk is considered, the inflation risk is considered, we have to understand that mutual fund is an asset where you have a very minimal risk, which we have to be really understanding. But end of the day, to understand the nature, to understand the best risk, and to understand how the mutual fund, like which actual mutual fund you have to be selecting, you have to be concerning with an investment advisor, which I am not. But being said that, I could say this particular thing: mutual fund has one of the lowest risk compared with any of the investment fields that you have, be it real estate, be it whatsoever it is, be it gold, be it whatsoever it is. You have mutual fund as one of the lowest risk class investment. And also we have to understand that you look at the data, you understand that mutual fund has been giving you a very great consistent performance for a period of very long time. And this is one of the important studies that has been done in India, and it says that over 10 years of period, your risk on particular investment goes to almost 0%. You think about it, your investment, if it is long term enough for 10 years, chances of investment to be going below what you have invested is almost 0%. And when you look at the data very properly, when you look at the data, you can see that in a span of 7 years, no mutual fund have ever given negative returns. No mutual fund have ever given negative returns for a span of 7 years. And also you have to understand, you look at the index, that is Nifty and Sensex, the returns that these index or index funds has been giving since inception for the past 30 years is 12% per annum, which is a fantastic return. And you have to understand that this minimal risk, that is mutual fund actually, I like being in this position, I cannot say that it's having zero risk. It do have the risk of, just like the risk you walking through a road. But when I clearly say you this, mutual fund is a great investment where you have a very less risk, and when you see it in a long term perspective, it is having almost no risk. So mutual fund in this ecosystem in India has been made so easy, so safe, and so perfect by the Security Exchange Board of India. And great funds has been going around here. India is an emerging country. If you have any sort of money, or if at all you have been keeping your money in your savings account or something, make sure you invest it. If at all you want to invest in mutual funds. Probably a very basic thing is you can go with index funds, which is the simplest thing to do. You being having a very safe environment here, do invest your money, let your money grow, get yourself moving away from the inflation, have a very decent return, invest and grow. Hope this particular session has brought some value to you guys, and we've been talking about how mutual fund is so safe for you. So if at all you have any confusions regarding the safety of mutual fund, how to invest in mutual fund, and so on and so forth, please make sure you comment below. I can give you answers. And also, if at all you have any money questions, make sure you comment below so that I take out that question and read it out and explain it on the next video. So I'm trying to have that interaction with my audience, getting your questions from you itself and reading it out on my video. So I hope that thing works. So make sure you comment and subscribe. Thank you.